Well, guys, we got a lot to talk about here. I thought I would do it here at my little radio area. It's one of these days where I wish I had a radio show in the middle of the week, just because there's so much to talk about. My wife was laughing at me because I was going, I said, I just live for stuff like this. This is what I love doing, is coaching people, coaching investors through things like this. So I have a lot of audio clips I want to play for you. I just want to walk through what's going on, some of the things that you're not hearing, some of the things that may not be as obvious, especially when you're dealing with crazy market conditions, stock market conditions, and even bond market conditions, fixed income. A lot of times when people go through times like this, they think, I've got to protect myself. I got to protect what I've got. I can't lose anymore. It's what goes through their minds, right? And what they're doing is they're completing the pattern, as I like to say it, in their mind that, markets have gone down, let's say, and that they're going to continue to go down. That's kind of the way our brains work. We see patterns, and it helped us when we had the woolly mammoth running around. That's where he hid every morning. That's a pattern. You got to make sure you stay away from that area, or the saber-toothed tiger or whatever. So when it comes to markets, we look for the same types of patterns. So what I want to walk through, there was some really interesting audio from this morning that I want to go through. Now, with the tariffs, I've been talking about the negotiating aspect of tariffs. Tariffs are there for a negotiating tool. We think of them as a revenue raiser. Are we actually being crazy about this? Is Trump being crazy about this? And let me just play some audio from this morning regarding that particular aspect, because there are some people that are going, hey, we got to rein this stuff in. This is getting out of hand. And this is something I want you to listen to right here.
Let me just say what President Trump said yesterday to some of the Republicans. He talked about how you see some rebel Republican who wants to grandstand. He says, I saw it today, a couple of your congressmen, I think we should get involved in the negotiations on tariffs. Oh, that's what I need. I need some guy telling me how to negotiate. He says that this hurts his negotiation, as if this is a negotiation that tariffs will eventually go away.
Yeah, and listen right there. I need help on negotiation. Now, here's the guy that wrote the book on negotiations, right? Art of a Deal was his book, and I remember reading that many, 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 many years ago. But the idea here, she's saying, well, that it almost makes the assumption that this could go away. Well, what happens if something goes away rapidly? When you have news, that's what makes markets change. When news comes out, information is immediately implemented into stock prices, and they do whatever they're going to do. If the news is good, then they shoot up so fast that you can't get back in on time. So Elizabeth Warren, who is on the other side of the aisle, had something to say regarding this, and she was talking about businesses and how they're responding.
But our trade and tariffs reporter points out this morning that there's an on-the-water clause that comes with this in the customs release that basically says this tariff isn't enacted until 12:01 a.m. on items that are then leaving the ports from those countries. So anything already on the water is not going to come in with the tariff. Those items will be coming in to the end of May without having.
Okay, so real quick right there, you're listening to her talking about that this stuff, when this stuff is on the water, you have these items on a ship, it's not subject to the tariff. It's not subject to the tariff until after. So it may be May. You may be looking at these things aren't going to be implemented till May. So in reality, is it going to affect prices right now? That's what people are worried about, is inflation, right? And she's saying, hey, this may be quite a while because this stuff is in transit. And I think further on in this clip, there's Elizabeth Warren, so I'm going to keep going.
A tariff on them. You said you've been hearing from businesses that are already raising prices on this. Are they gouging by raising prices before their own prices go up?
Look, if they simply are passing along increased costs, that very much is a tax on the American people when they do that. But there are businesses that are already saying quite publicly, yep, they're worried, and so they're raising prices now.
Now, so if they raise prices right now, remember what we own when we own stocks. We own the rights to the earnings. If they indeed gouge, our prices go up at the grocery stores. They go up, at Walmart or Target or wherever. So if they do that and we own those companies, we benefit as the owners. But there's another side to that. If they raise the prices and their competitors don't raise prices, people will actually walk away from the companies that are raising prices and go to the ones that aren't raising prices. So there's a real danger to doing that. But she's saying, yeah, I believe that is indeed what they're going to do. And Joe, who's on CNBC, actually goes, well, wait a minute. Let's listen to the other side of this deal.
Remember our last conversation. This is almost like part two. Remember our last conversation about price gouging. So now you got another way to say that corporations are doing that.
Well,
but egg prices came down, inflation came down. It seems like the corporations only gouge when you say they're gouging, and then they're unable to at other times.
So is this just something that's convenient to pick on right now? Is it because last time they were accused of doing this, actually prices came right back down and inflation came right back down? And is this something that could be super, super short term? And again, if you're the only company raising prices on something, you could lose business to the other side. So you don't necessarily want to be on that side. As I've often said, the issue with inflation is that nobody wants to be the first person to raise prices typically, because that could take market share away from you as a company. Now, there's a guy from a company called Apollo. He's a CEO of Apollo, and he was just talking about, are these tariffs good? Or is this something that I agree with? Is this something we ought to be doing? What was his stance? And I thought he had some really interesting comments.
What do you personally think of these tariffs?
I think we needed to reset our trade policy. The U.S. is the second freest trading market in the world financially after Japan, and is the freest trading market in the world considering non-tariff barriers. Why is that written in stone? Why shouldn't we be the 10th or the 20th? The policies that have been in place since the end of World War II are not fit for today. I don't know that, I think the movie Everything Everywhere All at Once was probably a better movie than a recipe for trade policy. So one can, I think, quibble with the tactics, but the goal of resetting our trade policy doesn't bother me in the slightest.
Okay.
Yeah, maybe we're moving too many areas, doing too many things at one time. But he's saying the second freest trading, and the number one, really, in some aspects, freest trading. And in other words, that we don't put a lot of barriers on other countries. And he's saying, well, maybe we needed to reset this for a while because it's been this way since World War II. Now, is this the best way to do it? Is this the best way to handle it? Maybe not, but are there positives that have come about as a result of all these things going on?
This is how you would do it, or you're saying this is not how you would do it?
No, it's certainly not how I would do it, but I think it's important that we just step back and think about it. So since inauguration, interest rates are lower. The PE of the S&P 500 yesterday was 21 versus a long-term median of 16. Air has come out of the market, probably appropriately. Unemployment is 4-ish%, 200,000 plus jobs were added, massive investments are coming into the U.S. How should we have done this? Probably in a more logical sequence.
Okay.
Are there things that are coming out of this that are actually fairly positive? Yeah, interest rates coming down, which is one of the big goals. So we look at a lot of the things happening, and they're arguably a lot of positive things coming out of all this. Could there have been a better way of going about it? Yeah, maybe, but what? A lot of times you ask somebody, well, what would you do differently? And they'll be at a loss and be like, I don't know what I'd do differently. In reality, it's easy to go in Monday morning quarterback, but when it comes down to actually implementing, how do we do something different? That's not necessarily as easy. Well, so is this a short-term thing? What are the long-term goals? What are we really looking at here? And I think this is where it gets really, really interesting, is what the long-term goals can be.
I think the logical outcome is that we should get deals quickly. I was in Mexico City 5 weeks ago.
So if we get things quickly, that means this is very, very short-lived. Don't know, not sure. But listen to his meeting that he was in and some of the conversations that took place. This was fascinating to me.
I met with the 200 leading business figures in Mexico, industrialists, leading families, banks, brokers, and others. And I came back and I reported to the administration, to a person, they were pro-tariff, which is a shocking thing to say, because this group of leaders sees the market the way I see the market. The U.S. and Mexico should be positioned to dominate the economic landscape for the next 50 years. U.S. advanced manufacturing, Mexico the workshop, and so on and so on. Why haven't two agreements been able to get us to that position? And if you think about it, there are 5 issues. One is immigration, which is not Mexican immigration, it's Central and South American. It's second, Chinese transshipment of goods. 3 is fentanyl. 4 is AMLO's abrogation of contracts. And 5 is cartels. You ask Mexican leaders about those 5 issues, they want them resolved. One of the leading families said to me, if it takes tariffs to make Mexico great again, so be it. Imagine an administration that stood up and actually said, our goal is to do this. Tariffs are a means to an end to do this. The uncertainty of what the outcome is that the administration wants is creating uncertainty.
Right.
And doing things one at a time. I mean, Mexico and Canada are among our most important trading partners. Putting those two to bed, I think, is much more interesting than going after everyone, everywhere, all at once, which potentially...
Yeah, and that's what you got to look at. Is this something that actually is a vehicle to get there? I don't know. Nobody really knows. But the idea about this is that you've got to have, we as a service economy in America, that's really where we're focused. We're focused on services, higher end type of things. We need to have a back room, like a manufacturing, someplace doing that type of manufacturing. And as a matter of fact, let me just, here's what he had to say about what are we going to do? Are we going to go backwards here? Are we going to open up all kinds of manufacturing facilities to start doing low-end goods? Well, here's what he has to say about that.
Then there's the question, just what does labor cost? And invariably, labor in the U.S. is, I imagine, in most places going to cost more than it is in a lot of other places.
Yeah. Are you going to go and start having us, high labor cost country, make these goods? Because that's what's going to be inflationary. If all of a sudden we're putting together all of these products and we're actually manufacturing them in the United States, but our hourly cost to do that is much higher than the rest of the world, now you're dealing with a reduction in standard of living. Is that what we want? Does that make any sense?
Andrew, we are not going to make sneakers in the U.S. We have 4% unemployment. We're building all these other things.
And that's funny. That's actually some of the hosts on WTN. I've actually made that comment. I said, the reality of it is our unemployment rate is fairly low. How are we going to get the jobs for all of these people? How are we going to do that? It's like, and they're like, yeah, good point. Yeah, how are we going to do that? Are we going to start making sneakers here in the United States? And the answer is no.
To the extent we do not want massive amounts of immigration, we are not going to be the low-cost manufacturing center for low-value goods. We will have relationships that allow us to do that. Right. What is being called into question is whether that relationship is with China, or whether that relationship is with Mexico, or Vietnam, or Indonesia, or someplace else. And I think time will tell as to how these things sort out. China is its own category as it's a strategic competitor to the U.S., and the EU, the primary issue cited by the president, is non-trade barriers.
Yeah, and the reality of it is that China exports to us, I think, is like 5 times as much stuff as we export to them. So the reality of it is the big loser in this, if they don't do something, if they don't come to the table, it could be them. And then it could be Mexico. I loved it. Somebody said, make Mexico great again. It could be that. You don't know. But it's who will come to the table first, because we've got a lot to give and they have a lot to benefit by coming to the table. Now, an investor may look at this and go, hey, here's what I want to do. I'm nervous. I want to go to fixed income investments, because we've seen some interesting things happening in fixed income investments. We've actually seen, in some cases, interest rates going up on safer types of bonds right now. Well, what makes interest rates, go up? Well, bond prices going down, which tells you that people are trying to get out of bonds. And you go, well, why? Who? Are countries that hold our debt? Well, a very small amount of our debt is actually held relatively by other countries. We think, China could dump our treasuries. Japan could dump our treasuries. These countries could dump our treasuries, and they could be shooting themselves in the foot. Yeah, for sure. Because if they're dumping it, that drops the price, and that hurts them. But a relatively small amount of our debt is actually held by foreign countries. People don't realize that most of our debt is actually held by American citizens. Now, if this happens where bond prices are driven down, interest rates go up, does that tell us that maybe people are thinking maybe this is shorter run or shorter term than we think? Is that a possibility? But is there a risk of getting too much money in fixed income investments? Could we be trying to protect ourselves by moving out of stocks, let's say, if you're going, oh, I'm scared of the stock market? Could you actually be shooting yourself in the foot? Are there risks in fixed income investments that you may not be seeing? Check this out.
I don't worry so much about the plumbing system. If I think about
He's not plumbing system, is the banking system is what he's talking about right there.
Market and the biggest mismatch anywhere in the world, it is actually the liquid market that I worry about. We have built up this notion that everything that we own, particularly fixed income, is liquid. It's not. It's not liquid in the best of times.
Right.
The moment we get a sizable risk-off event, we will actually see massive pressure come in public fixed income, not because the instrument is underlying negative, but because there's no liquidity. We saw this in UK LDI. We saw it just going into pre-COVID. It is the thing that I look out there and I think is the biggest mismatch and the biggest point of instability in our economy.
So we talk a lot about risks in investing, and I find that financial firms typically don't focus enough on risk. As a matter of fact, they ignore it. Back when I was working as a broker, we didn't ever talk about it. Oh, we talk about return. Risk has to be thought of, and there are different types of risks. There's liquidity risk is one of them. That's what he's talking about right here, is can I actually turn the investment back into cash? Like a lot of different products out there, they don't have great liquidity, and that can be a huge problem. You think I'm avoiding risk by moving from here over to here to fixed income, and you may be taking on risks that you're not even recognizing. So I think that all of this stuff is just great to understand and see a backdrop and hear from a different perspective than you normally hear about. That's why I love educating, because I find that the more educated you are as an investor, the more you hear how things work, how the plumbing works, as he was using that term right there, the less you worry about this type of stuff. I sit back and I just watch these things with great interest because I've seen this play so many different times. 35 years of doing this plus, I've seen these types of things happen. I see how they work out. You never really know how they're going to work out. I've always just seen that they do work out because everybody in their own self-interest, they want to make sure that they are okay. And because capital markets are run by people that all want to make sure that they're okay, this stuff has a way of working out. And I sit back and go, this is why, as I've said in previous videos, this is why the investment portfolios are designed for stresses like this. We have so many different asset categories that you don't typically find in a portfolio that I don't worry about these types of events. More, I just kind of watch in interest and go, wow, I wonder how this is going to work out. So I hope this video has been helpful. We'll catch you in the radio show. I'll be talking a lot more about that over the weekend. We'll catch you guys soon.